There's a couple of significant benefits to the proof of stake approach. One is that it is more accessible to be a participant, and it's even more censorship resistant to be a participant. Because like if you're a miner, you have to have a large amount of capital to make a mining farm. You have to be pretty significant in size. These are things that are quite detectable. Government has plenty of experience sort of finding and detecting large energy consumers in the context of wanting to arrest people growing the wrong kind of plants from time to time. So this is the sort of thing that's like findable. Whereas in proof of stake, like all you need is just a computer somewhere with an internet connection somewhere.
The merge, the joining of the existing execution layer of Ether's mainnet with its new proof of stake consensus layer, the beacon chain, is only about a week away according to the official timeline. Earlier in the week, the network carried out the Bellatrix upgrade, its final hard fork before the main event. The hard fork marked the beginning of the much-awaited transition, which according to the Ether website, will reduce Ether's energy consumption by approximately 99.95%. The merge eliminates the need for energy-intensive mining. Instead, it secures the network using a staking process in which millions of Ether investors worldwide can participate. The team expects the network to have more scalability, security, and sustainability after the transition. As the upgrade drew closer over the past few weeks, Ether, the native token of the platform, has had some impressive rallies despite the bear market and the gloomy macro environment. That rally continued on Thursday, with ETH rebounding strongly despite recent losses. As of press time, the native token has gained almost 6% in 24 hours and is now trading at $1,708. Its market cap has also increased to $208 billion, over 50% of Bitcoin's $396 billion market cap, according to CoinMarketCap. Despite the excitement about the transition to proof of stake, there are still some concerns about how it would affect the decentralized status of the blockchain network and investors' privacy in general. In a recent interview, Vitalik Buterin, the creator and co-founder of the platform, discusses the transition, its pros and cons, and what the team is doing to fill the lapses. We will now take you to Buterin's interview. Please watch, like, and share this video. Also, ensure you subscribe to the channel and drop your comments and observations in the comments section below.
Yeah, so I think there's quite a few differences between proof of work Ethereum, or at least historical proof of work Ethereum, and proof of stake Ethereum. And it's kind of important to unpack a lot of those differences, because people, like, in the Twitter sphere or wherever else, often end up talking about things as a package deal. And, you get people occasionally even saying things like, oh, proof of stake is bad because, look at Ethereum's fast block times. And it's like, no, those are two separate issues. So I think, like, the way that I would categorize the different issues are, one, proof of work versus proof of stake, right? So this just has to do with, like, who is responsible for kind of creating blocks, building on top of other blocks, forming consensus, and doing all of those things. And the differences between proof of work and proof of stake is basically, in proof of work, it's miners, who are these kind of generally businesses that buy up large amounts of mining hardware, find someplace to run them with cheap electricity and cheap operating costs, and like storage and cooling and all of those things. And then they just run the miners 24/7 and try to make a profit and hopefully keep the network running at the same time. In proof of stake, sometimes I use the metaphor of virtual mining, where the idea is like you're putting in your coins and you're sort of converting your coins into a virtual miner. And the Ethereum network kind of simulates the process of mining in the sense of like randomly assigning these depositors the right to create a block. So the practical differences are, I think, one is just who can do it. My own view is there's a couple of significant benefits to the proof of stake approach. One is that it is more accessible to be a participant, and it's even more censorship resistant to be a participant. Because like if you're a miner, you have to have a large amount of capital to make a mining farm. you have to be pretty significant in size. These are things that are quite detectable. Government has plenty of experience sort of finding and detecting large energy consumers in the context of wanting to arrest people growing the wrong kind of plants from time to time. So this is the sort of thing that's like findable, whereas in proof of stake, like all you need is just a computer somewhere with an internet connection somewhere, and that's just like much easier to censorship resist. It's much easier to just hop jurisdictions even at a moment's notice if you feel under threat. It's much smaller, more nimble, more people can do it because of the lower capital requirements. So those are kind of my arguments for proof of stake over proof of work in general. But then there's also two other issues that people are talking about at the same time, right? So one of those issues is the chain-based versus attestations, right? So like in consensus algorithms in crypto, there's this kind of spectrum where either you can be chain-based, which basically says you have like one block per period, and you need to wait lots of blocks before you like really have a strong consensus on any particular block, right? So this is how Bitcoin works. So you get one block on average every 10 minutes, and you wait 10 minutes, you get another block. You have to wait 6 confirmations. In Ethereum, it goes down to 13 seconds, but it's like still kind of similar. But then the opposite extreme is like Tendermint style, where literally every validator has to vote at the same time. And so you basically have your entire validator set supporting a block after only a few seconds. Ethereum takes this middle ground between the two, where we have lots of attesters kind of signing off on blocks in parallel. But at the same time, like that attestation is staggered over some period of time, so it takes like about 10 minutes for a block to finalize. And then there's this issue of like, is there some meaningful difference between building a block, which is like voting for the chain at the same time as creating new transactions, versus kind of proposing and attesting separately, where you have these like two separate roles, where one of those roles is creating a block and another one of those roles is basically voting on which block is the right block. And like people argue about like, are these two things actually different? Probably not, because building a block on top of a block is ultimately still voting for a block. Attesting to a block is still voting for that block.
In his interview, Buterin also speaks about some of the issues that have cropped up through the transition. One of the issues he mentions is the maximal extractable value, MEV, according to the Ether platform. Maximal extractable value refers to the maximum value that can be extracted from block production in excess of the standard block reward and gas fees by including, excluding, and changing the order of transactions in a block. This is an issue that many Bitcoiners have pointed out as a severe weakness of ETH 2.0. There is the concern that ETH 2.0 could enrich validators with the most 32 ETH stakes faster than the ones with less. Even Ether developers worry that the introduction of MEV and validator rewards could be a centralizing force by discouraging the operation of a solo validator, making it more financially convenient to join a pool. Here is what Vitalik Buterin has to say on the issue.
The third issue, and this is the one where I think like there is quite a bit of like legitimate cause for concern, is the kind of MEV proposer builder stuff that people have been talking about recently. So the idea here basically is that on Ethereum there are a bunch of applications that like create what we call MEV, MEV basically means like opportunities to extract revenue by doing really clever things to like stick your transaction in front of other transactions or reorder other people's transactions, right? So like opportunities for miners or for block producers to get even more revenue by being really clever about how they produce their blocks instead of just using stock software. And now this is an issue where like Ethereum has lots of MEV and Bitcoin has very little. And so I think you can argue it as a point in Bitcoin's favor, actually. But like it's basically a consequence of the greater array of applications that Ethereum enables. And Bitcoin people argue like, see, this is exactly why it wants to have greater separation between your money and your application layer. But so like I do admit this is a point in favor of that viewpoint, but it's also kind of separate from proof of work versus proof of stake, right? So as a kind of philosopher, I think it's important to sort of like distinguish between those issues and argue at the level of concepts instead of at the level of packaged products. there, like in the Ethereum community, there is this discourse about how do we like mitigate this problem. And one of the ideas that has developed is this concept of proposer-builder separation, where basically you separate out the role of being a validator from the role of creating blocks, and you allow the role of like creating blocks and like actually choosing what goes into blocks to become more professionalized. And then you have an auction mechanism where if you get assigned the right to create a block, you just listen to the auction, you get a bunch of bids, and you take the bid that has the, you take the highest bid, and like you use a sort of protocol, you agree with them, and they provide the block, and that block is kind of put into place, and you get whatever the payment is. Right. So the nice thing about this is that it does kind of separate out the block the role of being a validator into this role that continues to be this kind of very dummy automaton function where you just run completely automated software and you don't think about it, from this role where you actually choose what the block contents are. And this does mitigate the centralization issue, but people have raised the concern of like, well, what if one or a couple of builders become so much better than the rest of the builders that they start producing all the blocks, and this also becomes a censorship risk. And there are strategies for mitigating this, right? So like there's this concept of partial block auctions where instead of the builder constructing the entire block, the builder just constructs most of the block, and then if they missed any transactions, the validator can still add a couple of more transactions. But like this is still a research area, right? And I do think that there's definitely fair cause for concern in figuring out like exactly kind of how much we can do to like make that side of the stack more resilient. But it's I think the good news is that it's like in order for this mechanism to start censoring, basically all the blocks have to be censoring, right? Like if even 10% of the blocks are not censoring, then you just have to wait 10 slots until you find a block that is willing to include whatever, right? So that's the good news. But at the same time, I think it's also important to not be complacent, and it is like I believe in trying to kind of try like many different strategies at the same time and not rely too much on one.
What do you think about Vitalik Buterin's interview and the upcoming Ether merge? Please drop your comments and observations in the comments section below and hit the like button. Also, ensure you subscribe to the channel and turn on post notifications for more videos like this. Thanks for watching.